See, what you see in India is that over the last 5, 6 years, real estate prices haven't really changed much at all. In other words, prices on an inflation adjusted basis are probably lower today than they were 5 years ago in many markets. So while it is true that there have been some hikes in price points in certain geographies in recent times, it doesn't reflect a large big trend in the market. Prices are still extremely reasonable. Affordability levels in housing continue to be very, very high because incomes have trended up over these last few years, even though home prices have actually stagnated largely. So affordability levels are high. So the result of all of this is that from a demand perspective, we continue to see very strong demand for housing. We actually haven't seen much slowdown at all in recent times. You could also argue that because for 2 years there was a complete shutdown in demand during the pandemic period, now there is a lot of pent-up demand. New household formation has happened. People have gotten married and they have lived in a sort of congested space for a long time. Now they want to branch out. So that household formation is the key driver of housing demand, and household formation has not stopped just because a pandemic is there. So household formation has happened and affordability is good. So overall demand conditions are extremely robust, and you see that on the housing loan side as well, because you're seeing housing loans continuing to grow at a very, very brisk pace, whether it is in the affordable housing space or in the prime housing space. You're seeing home loan growth, which is at multi-year highs right now. See, overall home ownership in India continues to be very, very low. So people, by and large, don't own their own homes, at least in the organized sense. It's only in the unorganized sector that you can imagine that there is a little bit of ownership, but in organized ownership is very, very low. And if you look at tier 2, tier 3 markets, aspirationally, people want to do all the same things that tier 1 and metro market customers want to do, even though their means are a little bit more limited. Now, in these markets, so far, we have not actually had quality housing being developed. So most customers have been building their own homes. So the key narrative in small towns has been, I have a small plot of land which has come to me from my past generations, and I'm going to try and construct my own home on that plot of land, and I will do that in installments over a multi-year period. First, I will just build the ground floor, and then later I'll put one terrace, and then I'll put one room in the terrace, etc., etc. That stage-wise or phase-wise construction of own housing is the way small town India operates, and actually it continues to operate like that even today. The key thing that is required there is some finance for them to be able to do this, especially if they're going to do it in a stage-wise manner, and two, the know-how for them to actually do it well, right? Now, both of these are improving slowly but steadily. So you see a lot of housing demand happen in the second and third tier markets today. From a growth rate perspective, tier 2, tier 3 markets are also growing quite fast. They're actually growing slightly faster than the larger markets, but I wouldn't say that they are growing at a breakneck speed or anything. They're growing slightly faster than the larger markets, and a lot of that growth is led by small business customers rather than by salaried customers. So if you want to look for where housing demand is in small towns, it is all with the small business people. See, there are aspects of housing finance that will surely get digitized over time. Right, the underwriting aspect, a big part of it is getting digitized as we speak. However, there are some aspects of it which continue to remain very physical and likely to remain so in the foreseeable future. For example, land documentation in India is not centralized and digital. House and home ownership sort of registration, etc., is not centralized and it is not digital, and hence, creating security on the property, for example, as a lender, you cannot do that digitally. You need to have physical presence to make that happen. Similarly, if something goes wrong in a housing loan and the lender needs to go and employ SARFAESI, then again the physical presence becomes extremely important, because a lot of the legal proceedings and procedures are not digitized. So there are some of these limitations to digital that exist. We should be aware of that. I'm sure many of these will slowly but steadily go away over time, but it will take time. As of today, the part that is most amenable to digital is the customer acquisition stage, where you can do financial sanction of customer using digital. And after you have set up the loan, the ongoing servicing of the loan, etc., you can do a lot of that digitally and save on a lot of your operating expense. So those are the core areas in which you are likely to see your home loans being different and much more digital in the days to come.